Hi, and welcome to our new episode of a crypto trading crash course. In the last episodes, you learned how to identify trends and which indicators are best to use in sideways, upwards, and downwards trends. On today's episode, we want to learn about different chart types and what are the pros and cons of individual charting types. Before we start, make sure to go to your account under Margin, Account and activate your promo code Trading Academy for up to $7,000 in bonus for your trading. Now let's get started with the most simple charting type, which is called a line chart. And a line chart is very simple because it just looks at one price within a predefined period of time. So in my case, I've selected 1 hour time frame. So every hour a new dot will appear with the closing price here of Bitcoin US dollar, which then is connected to the previous dot, which then, if you connect all those dots, forms this line. And the benefit very clearly of line charts is they make it very easy to, for example, identify trends. They give you a broad overview of what is in general going on with the market. So these is the type of chart you will usually, for example, also see when you watch things like Bloomberg TV, CNN, or any news format that reports about what is going on the cryptocurrency markets or financial markets in general. The drawdown of this type of chart is that it lacks the information. For example, because we only know that 1 hour ago, a couple of hours ago, the closing price of Bitcoin was at 21,893. We don't know what happened within those hours and what it took that the price went to this point. So theoretically, the price could have swung up all the way up to 30,000, all the way down to 10,000 and then settled at 21,900, and we wouldn't know about this with a chart. To identify things like this, we need to switch to the next type of chart, which is called a candlestick chart. Candlestick charts are probably the most famous charts that are out there because they give you much more information about what is really going on within a market. Now, within a candlestick chart, you have already 4 informations. You have the opening price, you have the closing price, you have the highest price and the lowest price, and those together then form a candle. Now, if you see a green candle on a candlestick chart, that means that the closing price of that period was higher than the opening price. Like, for example, in this candle, the price opened here at 22,600 US dollar and closed after an hour here at around about 22,800 US dollar. The wicks on the downside and upside, so the little lines that are above the closing price and below the opening price, are the lowest price for the lower wick here, so around about at 22,550 for this time period, or the highest price at 22,810 US dollar. On the contrary, if you see a red candle, that means that the closing price for that time period was lower than the opening price. For example, here, the closing price was at around about 22,660 US dollar, the opening price at 22,800 US dollar, with the highest price being up here and the lowest price being down here. So in comparison to a line chart, you have about 4 times the information already on candlestick charts. And if you zoom out, you still can identify trends here. Also very easy, but you see more what happened also to the upside and downside. There are not many downsides, in my opinion, for candlestick charts, with the exception that sometimes you just want a quick and clear view of how an asset is performing. In this case, I would always start with a line chart. If you then want to do the deeper dive, what is happening within the trends you have identified, you can switch, for example, to a candlestick chart. A variation of candlestick charts are so-called bar charts, which were very popular in the Western world, whereas candlestick charts were more popular in the beginning, at least in the Asian trading world. And candlestick charts display the same information. For the closing price, you have this little line to the right. For the opening price, the little line to the left. The highest point is marked here by the top of this bar, the lowest price by the lowest point of the bar. If the bar is red, it means that the closing price was below the opening price. However, those are rarely used nowadays because you'll get this exact same information but in a more eye-appealing way from candlestick charts, obviously. Other popular charts are so-called Heikin Ashi charts, line break charts, Kagi charts, or for example point and figure charts. A special type of chart which I personally also like to use a lot is the so-called Renko chart. Here you define a price movement that has to take place until a new box, either in a green color which indicates a move upwards, or down or red color which indicates a move downwards, is painted. So in this example, every time the price moves higher by 50 points or 50 US dollar than the high of the low of the previous box, a green box would be drawn. If the price moves lower than 50 points of the last box, a new red box is drawn. And this is independent from the time it takes. So this type of charts makes it very easy for you to identify the major trends. You don't get as much of the noise you get, for example, with candlestick charts, or also as a matter of fact with line charts. So they can help you to clearly identify the trends if you have, for example, trouble seeing and identifying whether we are, for example, in a downtrend or sideways trend or even uptrend at the moment. However, by the end of the day, anything that suits your eyes and works for you is the way to go for you. I'll give you the advice if you are a beginner trader. Maybe you want to start by identifying the major trends with the help of a line chart and then move on to candlestick charts to fine-tune your trend identification, plus then load all the recommended indicators we talked about on the previous episode onto your charts so you can get a good overview where buy and sell zones could be. Alright, this brings us to the end of our latest episode of our crypto trading crash course. If you enjoyed this video, why not leave us a like and subscribe to the channel. I'm going to see you again on the next episode. Until then, take care and bye bye.